Hello everyone and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, definitely moving towards the event season, Curtis, which we'll shout out a couple of shortly, which is good. I was at the a Black Lab. It's weird saying it that way, isn't it? But
Black Lab,
company over in Otley, which isn't that far from me.
right?
A little bit of a round table. Chatham House kind of rules, 16 people round a conversation, having something to eat and discussing the market. And and you can imagine some of the conversations.
Well, yes, it was Chatham House rules, as you say, but I dare say that some of our headlines today were possibly talked about last night.
Yeah. New cars, Chinese, EV, ECOS, you name it, FCA. Yeah. So we did we covered the lot of a 3-course meal. But shout out to those guys for inviting me and everyone involved with that. It was a great little evening this week. So we've got a bit of a busy show today, haven't we? Because we've got a fantastic interview from earlier on the week and quite a few headlines to get through.
We have indeed, yes. So we caught up with David Cately, who took over from Dale Wyatt earlier this year as Director of Automobile at Suzuki. And we ended up having a wide-ranging chat at what is actually a pivotal time for the brand as it completes what it's describing as its transitional year this year. It's finally entered the EV markets with the e-Vitara and has some ambitious growth plans, notwithstanding competition from new entrant brands, certainly the Chinese ones. And they're all points that we cover within the interview. I mean, it was a fascinating chat and it was great to have David on the pod, wasn't it?
Yeah, very insightful, very informative. And those that may not be able to get to their dealer conference, I've listened to the podcast. I think we covered the majority of probably what he'll be delivering to you at the dealer conference, but not all of it. I think he's held a little bit back ante, but we're going to share a small 5-minute clip from that interview with David at the halfway point of today's show. So do stay tuned for that. But if you haven't had it already in your podcast feed, then please do check out your podcast feed wherever you get your podcast and have a listen there. It's good 35-minute interview there. Lots of content and gives you a good view of the strategic thinking and outlook from Suzuki. So a great conversation there with David.
And it's been a week of anniversaries. At the beginning of the week, John O'Hanlon took to social media to talk about the 8th birthday celebrations for Wayland's, the group that he launched after Ridgeway. And that was getting plenty of attention, wasn't it?
Can you believe it's been 8 years since we last had that conversation with him when he first set Wayland's up, came back into the sector after he was pruning his roses for a little while and decided to come back in. And I can't believe it's 8 years since that happened. But what a time. Without getting into the detail, because just listen to podcast interviews that we've had with John, but what he's done in that 8 years has been fantastic as well, hasn't it?
Yeah. I mean, the way that he's grown that group and representation, because initially it was launched as a Volvo group, but he's taken on other franchises and constantly expanding, and a real sort of textbook launch of a new group and then growing it, scaling it. So good luck. Continued luck. I don't think they need luck. Actually.
I don't think they do. No, I think he's got it. I think John and his exec team have a clear plan of what they are doing. So shout out to yourself, John, and congratulations to you and all of your team on the 8 years. And the other one is IMDA. So Independent Motor Dealer Association, which I was part of on the initial setup of that 8 years ago. I can't believe, again, that's been 8 years, but great work from Umish and the other those involved, and we know there's quite a few. Sandy Burgess is now involved with the IMDA, which you remember from the chief exec of the SMTA, and Jim Reed and Stuart and the others that are all involved with the IMDA. So they're doing a fantastic job, particularly in that independent dealer sector. And I think we might see Umish down at the AM Live next week as well, which we'll talk about in a second.
Yeah, no, I'm sure we will. And as I say, Umish and the team there at IMDA have done a superb job, and they've got almost 2,000 members now. So over the course of 8 years, they've done a cracking job, and given that representation, that voice to the independent sector that didn't really exist before.
No,
so which then continued success.
And
there's
somebody else has
another.
got, I was just going to mention that, Curtis. Someone else has got an 8-year anniversary coming up, haven't they?
Yeah, me.
You.
I mean, talking about 8 years seeming, is it really 8 years? But it's it's 8 years since I left Motor Trade
Made that jump, yeah.
Set up my own business, and wow, it's amazing that time has gone, and it's. Don't look back and all that.
I remember those conversations that, do I make it? Do I do it? Do I not?
Yeah.
Is it going to be the right move? And now 8 years on, you're looking back going, why did I not do this earlier? I should have done this years ago. But, 8 years, fantastic. And, through the pandemic and out the other side as well. I mean, what a time you've had, and still going strong, Curtis.
Yeah, absolutely. And we've already mentioned AM Live. It is actually next week on Wednesday, the 12th of November at the Birmingham NEC. So hope to see lots of you there. Do come up, have a chat, and Phil and I will be there. We'll have our annual reunion there.
Yes, yeah. And Mr. Godbold will be there from his doing, from our top tips, and hopefully Stephen Whitton will be there as well from Menable. So we'll get hopefully the four of us together. But yeah, if you get your parking ticket booked, I think you can do it online for the NEC, get your parking space secured. But I think just looking at the social media, there's a lot of people attending that event next week, so it's going to be a busy one. So look forward to seeing who we can down there. I must say, just a little bit of a shout for the VRA Automotive seminar that's on the 19th of November at the Warwick University. Last time I looked, I think we've got about 185 registrations for that. Got a capacity of about 200. So if you haven't got a ticket and you do wish to attend, then there are some spaces still available. Check out my social media feed and any of the VRA members there. But should be a good event, that one.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And companies already featured on our supplier specials include Prospecting Dynamics, iVendi, ETT, Generational, MTC, and Jigcar. You can find them all on your podcast feed. And if you would like us to profile your business, then just message Philip or myself on LinkedIn.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Well, lots of big headlines once again this week, and they're from AM, Motor Trade News and Motor Trader, as well as Car Dealer. In the first half, we've got the full lowdown on how October's new car market performed with the latest data and analysis from the SMMT, plus Philip's roundup of some of the key European markets. We'll also take a look at trends in the used car market with a look at Motors' market view analysis of how stock levels, prices and demand across October. We have news of another new Chinese car brand making its trade debut next week ahead of its 2026 launch, and we'll reveal which industry veteran will be leading it. In the second half, we'll have a welcome update from the FCA on the industry consultation on its redress scheme. Edinburgh-based Eastern Western Group acquires some Audi sites from Lookers in Scotland, and Group 1 announces plans to exit its JLR businesses.
So, as you say there, we'll get on to the new car and LCV registration figures that were published this week. And as you say there, Curtis, new car market steady in October, but ECOS, which is the Employee Car Ownership Scheme tax, threatens 2 million sales goal. So we'll dig into the details a little bit here. So we saw that the market in October grew 0.5% up to 144,948 registrations. That takes the year to date up to 3.9% year to date. So we are pretty much on track for a 2 million new car market, but there's been a bit of focus on obviously the BEV share, aren't there, in terms of what that's doing in that year to date, with only 2 months left to run in terms of registration opportunities to get close to that ZEV mandate level. And obviously focus is now turning, as I said in the headline there, a little bit onto what the ECOS scheme that is set to end on the 6th of October 2026. So just less than a year away now, when the proposed ending from the government on the ECOS scheme is set to happen. So lots going on in this one, isn't there?
Oh, so much going on. I mean, it's worth looking at in just a little detail at the sectors as well as the fuel type. So looking at private registrations, they were actually up 2% for the month. Fleet was down 1.5%, which is pretty unusual because fleet has very much driven the new car registrations in the year to date. And it's interesting they've dipped slightly. Business registrations to those sub 25 fleets, that was up 32.7%. So only mild fluctuations there, and a sort of positive outcome, seeing the market grew by 0.5%. And looking at some of those fuel types, and you already alluded to it, so BEV registrations, they were up 24%, which equated to just over 7,000 units. And that took a 25% market share. And that's actually the second highest market share this year. And it's sort of closing in on the mandated target of 28%. With 2 months to go. So we'll see just how close we'll get to that by the end of the year.
Yeah. I think just on that, I think people are now focusing on the 33% for next year, because obviously the year to date is at 22.4%. With, as you say there, Curtis, 2 months ago, I think there's some conversations now starting to hit the media as okay, wherever we're at this year, but actually we've got to jump again by another 5% next year to achieve the 33%. So there's a bit of questions now whether that is an unrealistic jump to get towards that 33% in 2026. But as you say there, good growth, good year-on-year growth, and following that trajectory of increase, isn't it?
Yeah, and similar story with plug-in hybrids, because they were up 27%, taking a 12% market share, while hybrids grew 2% to a 13% market share. And looking at year-to-date BEV sales, they've actually surpassed the whole of 2024 already. So currently tracking at just over 386,000 units, and as we said, that's up 28.9%, and certainly boosted by sustained manufacturer investment, rollout of new vehicles, rollout of new brands, and indeed the government's electric car grant, which must be contributing to that as well.
Yeah, and as always, I mean, we get behind some of this data and start to look at some of that OEM activity, don't we, to see what's happening by by each of the manufacturers, because each time we've been talking about the new car figures, and BYD has been a topic of discussion in terms of what they're doing in terms of volume and market share. But you've been having a look at this data, haven't you, and having a look at that market share and who are the winners and kind of losers in terms of what's been happening both in October and the year to date there.
Yeah, BYD, it's fascinating just watching their trajectory. So in the month of October, their registrations were up 348%. That's based on, 3,500 sales, and that accounts for a 2.4% market share. Now, looking at their year-to-date figures, 39,000 units, giving them a 2.2% market share, and a year-on-year increase of 547%. But you know what? Just in the month of October that we're looking at, they outsold the likes of Citroën, Dacia, Fiat, Honda, Mazda, Mini, and many others, including Tesla. And if you look at their combined sales in the year today, as I say, it's a 2.27% market share. Now, what is particularly interesting is the competition from JACU and Omoda. So they're both brands owned by the same parent, Chery. JACU for the month of October took a 2% market share, just shy of 2%. Omoda took 1.5%, so giving them a 3.5% market share for the month. And if you look at year to date, they're on a 2% market share based on 37,346 units. So not that far behind BYD. So as we've already discussed, BYD, they're taking market share from a lot of the established brands, but JACU and Omoda are catching up with BYD now.
Yeah, as you say there, I mean, at that 2.27, if you add Chery into the Omoda and JACU as well, that nudges them up a little bit further. I mean, it's still fairly early for the Chery brand in terms of their volume, but again, starting to make, as you said there, those inroads into the volume, into the marketplace. So yeah, this is it's a fascinating one as it starts to roll out into the market. And just before we go on to the commercial vehicles, just an update on some of those European figures. So France up 2.9% year on year, up to 139,500. Germany had a reasonably strong month, up to 250,000 registrations in October. That was a 7.8% growth. Bit of a challenge in Italy, marginal fall for Italy by 0.6% there, down to 125,800. Spain is having a good time at the minute, a 15.9% year-on-year increase, at 96,800. But I think, when was the floods over there in Spain? Was that at this time of the year last year?
Yeah, I think you're possibly right. That would have had a big impact 12 months ago.
Yeah, and the US 1.3 million, but that's a 5.1% year-on-year fall over there in the US there. So a bit of a mixed picture across some of those European markets for the month of October.
And looking at LCV registrations for the month of October, and heading over to Motor Trader, the headline there is "Weak Business Confidence Sees Van Market Fall 15% in October." So that really does tell the story there. So the market dropped 15% to just under 23,000 units registered. And that decline actually follows a robust September and reflects a contraction of fleet renewals across 2025, because we have been reporting consistently throughout the year on declining registrations in the LCV sector, although they did rally slightly in September. And certainly in this story, it does highlight the impact of the drop in demand for new pickups, which were down 20% to just over 2,000 units, and very much reflecting the impact of those new fiscal measures to treat people. Yeah, that's a polite way of saying it.
Government meddling, is that another way of putting it? But,
yeah, I mean, this is really when double cabs were brought
Yes.
into company car taxation, and the appeal of pickups has certainly dropped considerably this year.
Yeah, and I think that's just, I mean, the headline in Motor Trader, the weak business confidence says it all, that we're heading towards the budget on the 26th of November. There's obviously concern from the business sector around what taxations will come from it. You know, there's all things around fuel now being alluded to, and tax on pence per mile for an EV now. I don't know how they're going to do that. Is it an honesty box? Who knows, eh?
That'll work.
Yeah, I'm not quite sure how they're going to manage that. But anyway, that's so there's lots coming out now, so you can kind of understand that. But I think you're right. I think that LCV sector, it's just coming to this final quarter, a little bit challenging to say they're ahead of the budget. But going over to Motor Trade news, and this is from the study that you do, Curtis, in terms of that Motors market view. And this is that used car stock at highest level of the year in October, saying that the average stock levels were up 7% month on month in October, and that's been driven by the 75 plate pre-registrations in the market there. Oh, did we have it? Yeah, I think we mentioned that. But yeah, so there's some great insight in this as always, isn't there?
Yeah, I mean, it's fascinating, really, and you're right. It is something that we've touched on over the last few months. That high level of registrations, pre-registrations of new cars, and we did see that in September, and a lot of those pre-registers are now coming into the used car market. So the market view for October, which I did work with Motors on producing the press release for this, but it found that used car stock volumes are at their highest levels so far this year, with the average dealer stocking 54 used cars, and those average stock levels are up 7% month on month in October, and very much driven by that influx of 75 plate pre-registrations, with Motors recording a five-fold month-on-month increase in 75 plate listings as pre-registered cars, as those cars entered the used market. And it also recorded a 2% month-on-month and 9% year-on-year increase in cars aged under 2 years old. So a lot of activity there for nearly new used cars coming into the market.
Yeah, and there's a lot of quoting here from Lucy Tugby, who's the marketing director there at Motors, saying that October's increased average stock volumes reflect the seasonality of part exchanges from the September plate change and end of contract for fleet cars, and that they've also, obviously, as you've been alluding there, Curtis, is saying that we also tracked an influx of pre-registered 75 plate cars filtering through to the used car forecourt there. So yeah, always an interesting one. And as always, when we talk about the market view from Motors, we do say head over to the Motors website. Lots of detail in that market view in there for the dealers to get their head around as to what's happening by fuel type, by sales channel, etc. in that market view.
Yeah, definitely. We'll put a link to that in the newsletter that goes out on Monday. And probably just worth adding that average days to sell for the month actually increased from 31 to 32 days, so only marginal, and average prices increased by just 1.3% to £17,877.
And briefly, before we go to the halfway point, because we have talked quite a lot about the FCA and the redress, but there has been an announcement this week which everybody's been pushing for within the sector, that this is covered in Car Dealer, that the FCA extends consultation deadline into motor finance compensation. They pushed it out to the 12th of December, and that was from the 18th of November. So I know a lot of people involved with this, from the FLA, the captive finance, etc., have been pushing, saying that there isn't enough time for them to review the consultation and to put their submission as to the challenge of the proposed redress from the FCA. So I think this is a welcome news that there is now a bit of an extension. I think the FCA is still saying that they are still planning to start payments. Is it March 2026 or something? So they're trying to stick to the deadline that they said around when they will start to pay out the redress. But they have extended the consultation period. But there's a little bit more in the story, isn't there, that has been announced as well?
Yeah, definitely. So within the story, it says that the FCA said it had decided to extend the timetable after hearing from lenders, consumer bodies, and dealer groups that more time is needed to properly assess market data and ensure a smooth rollout of the scheme, which is something we've been tracking pretty consistently over recent weeks on the podcast. But also within this story, it said that the FCA was slammed in a new report from the all-party parliamentary group, which this week said the scheme was, and these are direct quotes, said the scheme was not fit for purpose and could shortchange millions of motorists. So lots of moving parts within this, and the extra time. It's what was definitely needed. It did look as though things were being rushed through. So rather have a scheme that's fit for purpose rather than something that's just been cobbled together and put out to hit a deadline.
Yeah, definitely. So I'm sure we'll speak about that one again shortly on one of the podcasts. But we'll be back after this short break with the rest of the headlines, and following the interlude there, we will play the interview there from David Cately from Suzuki, Director of Automobile there.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
Well, David, thanks for that overview of the year today. I mean, it's fascinating just seeing what's been done, what's been planned, and what's been achieved in the year to date. And as you've alluded to, this year is very much about preparing the network and indeed your customers for your first fully electric car, the e-Vitara, because up to now, you'd had mild hybrids, you'd had a plug-in hybrid. How has the introduction of your first EV range gone so far in the network and the sort of response you're getting from customers? Because as you say, you've had that first month sales figures through now.
Yeah, I'm glad you asked, Curtis, because it's been a long time coming, this car. We're pretty late to market with an EV. We've concentrated on our strengths, because SMC's global approach has been to blended solutions, and other manufacturers have taken different approaches. But for us, this marks in over 2 years' work. We've been engaging, test driving the car for a long time, EV working groups, and so on for a long time. But it's the start of a new era, because ICE has been important, but we need to transition into the EV era. We were late to market, so what has given us time to do is observe what's been going on in the market, what went well, what didn't go so well, and how we adopted the good stuff and maybe steered away from the bad stuff. We had to get EV fit and ready, which means we put a hell of a lot of focus on training, because the process for a customer is so different. It is a car, but it's very different, especially for our own existing customers, because they're used to ICE products. We have to think about qualification and meeting their needs and taking them on a journey, but also to attract to conquest customers, because there's a lot of conquest customers out there that are driving EV products that will be appealing to a new Suzuki. And we had to win the hearts and minds of our dealers as well to ensure that they followed us on this journey. And I think we're catching up, but the car's the right car, it's got the right name, and it's definitely at the right time. For us, sales and engagement has started well. I mean, we had a number of pre-orders before we started physical on sales, but the sales rate has picked up, We've been running events, in-dealer training, and customer engagement, whether above the line, is very, very good as well. Good leads coming through, good engagement, and it's all about now accelerating that through to the end of the year.
And in terms of sales, I mean, you've said that the car was only launched in October, so you've got an aspiration for the balance of the year. But what about your first full year? What sort of volumes are you talking about for that?
Yeah, the first up until the end of 2025 will be what we can get. So
Yeah,
it'll be about finishing the year off strongly, building for 2026, and we see a third of our volume being EV going forward,
yeah.
which is really important to us. We've got a mainstay in Swift SUV, but e-Vitara will be a third of our volume going forward. So we'll be working closely with our dealer network, working closely with customers and customer experience to ensure that we're doing all the right things to match our aspirations, and preparing alongside that the additional training and needs that are necessary to maintain that run.
And how big a challenge is it to launch an all-new EV in a market that's pretty much crowded, especially with new entrant Chinese brands and a lot of noise around their EV models? So what sort of challenge did that present you with?
Competition is fierce, guys. I've never known such a complex, confusing, and competitive market. As you rightly say, the segment is really crowded with products, with offers, with rewards. And for us, it's about being different. We're a 1.5% market share brand. We've got a good relationship with a dealer. And we have a great history of making reliable and quality cars. And this is our difference. We've got a legacy aspect, but we must transition. But we can't lose sight of some of the historic aspects that really support us as a brand. And the fact that our first EV is called Vitara speaks for itself. It's it's a 25-year name association with 4x4, with the fact that it's a 4x4 small SUV car. It's a great product. It's been really well received by our network. The enthusiasm is off the charts. And with that name of Vitara and EV and 4x4, which is unique in that segment, I think that really supports the Suzuki name and legacy and sees a natural evolution towards that, which I think sets us apart from that competition. You need a different voice, you need different aspects, because you can't just be winning on price and discount. You need to maintain the legacy and the history and the reliability. And one of the couple of things that we always say is that we have a great product sold by great people in the perfect place. And that is a difference in our network. Great product, great people in the perfect place. And of course, it's underpinned by a 10-year warranty, which is service activated. So first 3, then a year after that, every time we have the car serviced, which is unique for an EV and for our own product range in the industry. So that's how we'll hopefully get share of voice in this crowded market.
Well, that was, like I said, there's 5 minutes there, but the full interview, as you said, published earlier in the week, is available on your podcast feed. But he's quite open in terms of their challenges, but also their ambitions for the future in that interview.
Yeah, and he did allude to October because it was just before the SMMT figures were officially announced. But looking at the figures, they had a cracking October because registrations were up 65% to 1,400 units. And that actually meant that they were outselling the likes of Seat, Tesla, Fiat and Honda. So something that David will be very pleased about, I'm sure. And a lot of that on the back of the e-Vitara, which, as he says, marks their debut as a EV brand now.
Yeah, definitely. So back to the headlines. A few headlines just to finish off today, and heading over to Motor Trade News, and a bit of a potential exclusive coming with this one, isn't there? We'll do our best.
Oh, well, yes, definitely. So the headline is Aon Auto UK appoints John Wakefield as managing director ahead of launch. Now, John will be a familiar name to many listeners as the UK MD of Volvo. He also had a senior role within Volvo across Europe, and he was also managing director of Harwood's, the dealer group based in the southeast. So yeah, he's heading up Aon Auto, which is pretty much a new name to us in the UK, although like many of the Chinese brands, it's got quite a long heritage back in China because it's launched in the 1950s. But what's interesting here is that it's being brought to the UK. The brand comes to the UK as part of a joint venture between GAC, which is the owner of Aeon, and Jamil Motors, which is the distributor for Farazon, the LCV EV brand. So some interesting some interesting developments here. They're launching at AM Live next week, so they'll have a big presence there.
Yeah, and we'll test our power of the podcast, won't we, Motor Trade Radio, Curtis? Because we're going to try and see whether we can get a bit of an exclusive with John and the team there at Aeon, just to see if we can get some time with them ahead of the launch down there at AM Live next Wednesday. So we'll see what we can do with that one and see how powerful we can the podcast can be, Curtis.
Yeah, fingers crossed.
Yeah, fingers crossed. Well, we'll head over to AM Online now, and we don't hear enough from this group, but they just carry on. I mean, I know the group very well, and Keith Duncan, who's the managing director or group managing director. And this is over in AM Online, and East and Western's Audi acquisition drives revenue to 1.2 billion. But this does break them into the AM 100 top 20. So, you say you don't hear a great deal from this group, but they are just, very dominant across those Scottish borders there, from sort of Glasgow across there to Edinburgh. But a couple of acquisitions there from Lookers that's been happening.
Yeah, this is a really interesting story, isn't it? Because it sees them acquiring Edinburgh Audi, Sterling Audi, and there's a Sterling Audi PDI centre as well. And as you say, all acquired from Lookers. And it is something we've referenced a number of times on the podcast with Lookers, that they are reshuffling the pack, certainly since they were acquired by Global Auto back in October 2023. So this is part of that process. But what a great acquisition for East and Western. And it's really comes across in a quote within the story from Keith Duncan, who says, we expect our Cherry portfolio to add upwards to £50 million to East Western Motoring Group turnover. Taken together, our new Audi businesses and Cherry businesses could add approximately £200 million to our turnover, increasing the size of the group by close on 20%. And he points out this should take the group's turnover to just over £1.2 billion, allowing for the turnover lost by virtue of certain brands moving on to agency model, which is something that he references.
Yeah, and if you don't know the group and you don't know Keith, then do check out Keith Duncan's LinkedIn post from earlier this week. And this business is now going to be celebrating its 100th anniversary next year. And Keith has shared a few pictures because he's been with them all the way, not for the 100 years, Curtis, before you say it. And I would never do that with Keith because he would certainly let me know. But he's been through with this group for a long time and through, and I think he probably sits back and wishes he'd kept some of the early Audi Quattros that he was driving around in and things like that, because they will be worth some significant value today. But yeah, what a fantastic celebration for that business, and some great acquisitions for them up there in Scotland. And the final story of this week, we are sticking there with AM Online, and this is that Group 1 Automotive has announced to exit the JLR franchise network, and this is that they are citing the economic pressures for the reason there. So this is that the AM 100 dealership Group 1 Automotive has announced the plans to divest its Jaguar Land Rover JLR franchise operations in the UK as part of a broad portfolio optimization strategy, that's a way of putting it, isn't it? Revealed in its third quarter results there. So JLR are getting a little bit of a shift around, aren't they, at the minute, between brand business representations?
Yeah, and I mean, it's probably safe to assume that this was all factored in before the shutdown, before the cyber attack. You know, that this would be part of a strategy that they've been working on for a number of months. And the story goes on to say that the US-based group said persistent economic headwinds in the UK, including stubborn inflation, high interest rates, rising energy costs, and weakening consumer demand, have squeezed margins and driven up operating expenses across the retail sector. And that's very much why JLR was within its sights. And within a company's statement, it says, as part of our ongoing portfolio optimization, we informed our OEM partner JLR of our intention to sell or relinquish our UK JLR franchise operations. And it's going to be interesting, isn't it, to see who is going to pick those up, because it actually covers 10 Jaguar and Land Rover dealerships.
Yeah, it's a big shift, this. But I say we've talked a lot about representation of JLR, haven't we, over recent podcasts from Lloyd's Motor Group and Inchcape and others that have been shifting that around a little bit. So I think it will be interesting, because when you start going into this in 2026 and 2027 over the next couple of years, I don't think this is going to be the last shift around this. But yeah, it's going to be one of interest to continue watching, in particular that GLR. But I think that's busy headlines this week, and a good snippet from the interview there with David from Suzuki there. But yeah, we hopefully, fingers crossed, Curtis, we may get an exclusive next week. We may not. Let's see what we can do with that one. And obviously the redress through the FCA continues to play out, and obviously the conversations around the ECOS scheme ending of next year and what the impact will be on the sector continues to grab some of those headlines going forward.
Well, you've really set a teaser there, haven't you?
Hopefully, yeah. We'll see.
Right. We are frantically now pulling out all the stops, but that's all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.